Hey everyone, and welcome to This Explainer. Today, we're diving straight into a massive high-speed collision that's unfolding right now. We are talking about skyrocketing AI profits, crashing headfirst into a rapidly shifting labor market, and the absolute scramble in politics to somehow control it all. It's a fascinating dynamic, and by the end of our time together today, you're going to have a crystal clear picture of exactly where this tech is driving the global economy. To make sense of all this market data, we've broken the latest updates into four quick areas. Number one, the AI earnings boom. Two, building the AI infrastructure. Three, AI and the labor market. And four, the fight for AI oversight. Let's get into it.
All right, starting things off with Section 1, the AI earnings boom.
NVIDIA's CEO, Jensen Huang, pretty much perfectly summed up the global mood recently. He said the economics of AI have become, and this is a direct quote, insanely profitable. And he's definitely not exaggerating. He dropped that line right as NVIDIA is accelerating its massive infrastructure push, shipping out next-gen networking switches alongside Taiwan Semiconductor. The hardware makers are seeing profit margins and global demand that are literally historic. I mean, they're setting off this financial chain reaction that's totally altering how money moves through the tech ecosystem. And that massive profitability, it is trickling down to startups at an unbelievable pace. Just look at this number. $59 billion. The Chinese AI startup DeepSeek is reportedly gearing up to raise $7.4 billion in its very first external funding round. If they pull that off, that single move pushes their valuation to a staggering $59 billion, basically overnight. The sheer volume of cash flowing into these models is virtually unparalleled. It proves investors don't think this is just some fleeting trend. They see it as the absolute bedrock of the future economy. And crucially, this isn't just an NVIDIA thing or a startup anomaly, it's the whole shebang. Across the entire sector, companies are consistently blowing past Wall Street's expectations. Broadcom is pulling in $22.2 billion. CrowdStrike is sitting at $1.39 billion. Samsara is hitting almost $479 million, and C3 AI is at $51.6 million. So whether you're looking at enterprise software, high-level cybersecurity, or physical hardware, this undeniable surge in AI demand is just triggering massive earnings beats everywhere. Every single link in the tech supply chain is cashing in right now. Okay, moving right along to Section 2, building the AI infrastructure. Because here's the thing, this technological leap isn't just about writing code in the cloud, right? It requires an unbelievable amount of raw physical power. Broadcom is currently building what they call the AI XPU platform, with financial heavyweights like Apollo Global Management and Blackstone. Their goal? To deploy an incredible 20 gigawatts of compute capacity by 2028. To put that into perspective, 20 gigawatts is the kind of electrical grid capacity you usually reserve for entire nations. And now it's being marshaled purely to compute AI. It's an industrial-scale mobilization of money and energy. But you can't build all that without hitting some serious bottlenecks. Taiwan Semiconductor's CEO, C.C. Wei, is actively warning about manufacturing constraints, and he's already hinting at future price hikes just to manage this overwhelming demand. And beyond the silicon, you have the actual power grid itself. Senator Elizabeth Warren is raising alarms that private equity firms are straight up buying utility companies specifically to upgrade grids for data centers. The catch? The hidden costs of those massive grid upgrades could very soon be passed directly onto everyday consumers through higher electricity bills. So yeah, this is quickly becoming a kitchen table issue. Which brings us to a really pivotal part of our story, Section 3, AI and the labor market. We are witnessing a wild paradox in the workplace right now. Uber CEO Dara Khosrowshahi recently confirmed that AI has successfully boosted corporate productivity for them. But in the very same breath, he noted that this exact efficiency has forced them to slow down their hiring process. It's a direct one-to-one trade-off happening in real time. AI steps in to do the work, corporate productivity metrics naturally go up, and the need to hire new humans goes down. It's a huge shift from expanding human capital to maximizing algorithmic efficiency. And that stark reality is definitely setting off alarm bells in Washington. Senator Warren has explicitly warned that these rapid advances could reshape or entirely wipe out a huge chunk of jobs across countless industries. Her core message is all about urgency. She's arguing that protective measures have to be put in place right now, rather than waiting for widespread layoffs to actually hit people. Policymakers are waking up to the fact that this labor shift isn't some distant sci-fi future. It's happening right now and demands a structural response. All of this tension leads us right into Section 4, the fight for AI oversight. The political friction here has absolutely reached a boiling point, and the industry leaders are feeling it. Palantir CEO Alex Karp recently put out a serious warning. He said the momentum in Washington has shifted so heavily toward government control that major AI companies actually risk being nationalized. Just think about that. That shows you just how drastically the conversation has flipped. We've gone from this era of pure Wild West free market innovation into a phase where heavy-handed government intervention is being openly talked about as a necessity. And when you impartially look at the oversight proposals on the table, the strategies are all over the map. On one side, you have Senator Bernie Sanders proposing a 50% public ownership stake in the largest AI firms. Interestingly, reports show the Donald Trump administration is also exploring whether the U.S. government should take ownership stakes in these leading companies. Meanwhile, Elizabeth Warren wants a specific tax on AI to fund public education and healthcare. And then, on the complete opposite end of the spectrum, former Vice President Mike Pence is advocating for very limited oversight and strong free market competition to keep the U.S. in the lead. It's a total divergence of strategies trying to solve the exact same puzzle. Actually, scratch that. Maybe the most sobering thought doesn't come from politicians at all, but from inside the industry itself. The AI company Anthropic recently proposed an industry-wide development pause. Why? Because they're arguing that these increasingly capable systems might soon start accelerating their own development way beyond the pace of human oversight. When the brilliant engineers who are actively building this stuff start raising their hands and asking for a pause, it really underscores just how unpredictable this technological leap actually is. So, as we weigh the billions of dollars being minted on Wall Street against the massive changes arriving at the doorstep of the everyday labor market, we're left to ponder one absolutely critical question. How will society balance unparalleled free market innovation with the fundamental need for human oversight and stability? It is, for sure, the defining question of our era, and watching how these market forces and political proposals collide is going to dictate the entire future of our global economy. Thank you so much for joining me for this explainer, and as always, keep questioning the data.